Hello everyone, and welcome to the Bitcoin Talks podcast. I'm your host, Adam. Today, we've got an intriguing topic to explore, the Dutch tulip mania and its comparison to Bitcoin. We'll dive into historical bubbles, speculative manias, and how they relate to current-day Bitcoin. By the end of this episode, you'll gain a richer perspective on whether Bitcoin is just another bubble or if it's truly a revolutionary asset. It is a certain propensity in human nature. The propensity to truck, barter, and exchange one thing for another. Humans, left to their own devices, will inevitably begin swapping and comparing things, as Adam Smith once said. Before we can speak of bubbles, we need to clarify what an investment is. It is a calculated risk for a calculated potential gain. A bubble, on the other hand, is when that risk is irrationally exuberant, as Alan Greenspan, the former chairman of the Board of Governors of the Federal Reserve, once called it. In 1926, Palgrave's Dictionary of Political Economy defined bubbles as any unsound undertaking accompanied by a high degree of speculation. Essentially, only time can confirm if an undertaking was unsound and speculative. Revolutionary ideas often attract speculative capital. Internet stocks, electric vehicles, cannabis, and Bitcoin all promise various revolutions, whether in information, transportation, alternative medication, or economics. These speculations can either crystallize into confirmed revolutions or dissolve into nothing more than bubbles. Today, we'll compare the Dutch tulip mania in the 17th century to Bitcoin's current state. Let's start with the Dutch tulip mania that took place from 1634 to 1637. The Netherlands was engaged in the 80 Years' War, and amid the turmoil, people were more inclined to gamble rather than engage in long-term financial planning. The demand for tulip bulbs started organically, with French women wearing these tulips on their dresses, and it quickly escalated to a full-blown speculative mania. Beautiful bulbs were in extraordinary demand, and some bulbs were traded for up to 1,000 guilders, an astonishing sum at the time. Futures markets for tulip bulbs became the main investment vehicle, operating mostly unofficially in pubs called colleges, where premiums paid were colloquially termed wine money. During its peak, a delegation of florists recognized the irrational exuberance and attempted to stabilize the market by suggesting certain contract enforcements, which were ultimately rejected. By April 1637, all contracts were called off by the state of Holland. The mania ended, and all speculative bubbles popped. Now, let's discuss Bitcoin. Although comparing COVID to the bubonic plague or today's global turmoil to the 80 Years' War may be far-fetched, the result is somewhat similar. Financial planning has taken a back seat. Many young people see Bitcoin as their ticket to financial independence. While Bitcoin has the potential to drive future economies, it's essential to recognize that the Dagon market still dwarfs its practical use case market today. Since its inception in 2009, Bitcoin has remained a durable asset, trading at $44,000 as of today, and boasting a market cap around $880 billion. This makes it comparable to silver by market capitalization, showcasing its resilience. But what about its intrinsic value? While the intrinsic value of Bitcoin can be argued to be the cost of energy and resources required to mine it, its true value lies extrinsically in its utility as a dollar alternative in regions lacking stable currencies and its censorship-resistant nature. The shifting perception of value from tangible assets like land and commodities to intangible assets like technology and information has been predicted by great rabbinic minds centuries ago. The Vilna Gaon's words seem to materialize today as intangible assets dominate the global economy. Bitcoin's revolution in how we approach money fits this transformation, but only time will tell if it truly crystallizes. What's next for Bitcoin? While regulatory measures ended the Dutch tulip mania, similar legislation could affect Bitcoin. Bitcoin's unique user-up approach, as opposed to traditional corporation-down tech movements, adds an extra layer of resilience. One could argue Bitcoin and cryptocurrencies have already crystallized, given their 14-year history and substantial market investments. However, intense volatility still makes Bitcoin's long-term role as a stable store of value uncertain. The bubble claim is up for debate, but dismissing Bitcoin as sheer irrational exuberance lacks merit. That wraps up today's episode of Bitcoin Talks with me, Adam. Be sure to check the show notes for any links or articles mentioned in today's episode. If you have any questions or topics you'd like us to cover in future episodes, feel free to send me a message. Thanks for tuning in, and remember, in the face of uncertainty, sometimes it's worth holding on. Happy listening!